Well, I guess we can officially call it. Folks are taking some risk off the table on Tesla before the stockholders meeting on Thursday. Tesla's down again this morning. The market is down also, not unexpectedly, as we go into a very, very interesting week. CPI tomorrow, Fed meeting tomorrow, PPI on Wednesday, and the National Federation of Independent Business report this morning. I'll get into that later on in the show. That also is probably affecting the market this morning. There is zero in the way of good news to counter. When I'm saying good news for Tesla, there's no news really at all on the wires this morning other than the meeting. That's all everybody's talking about. Every headline with regard to Tesla or Tesla stock has to do with the meeting on Thursday. So with no other news, then people, I think, right now are just taking a really hard look at that meeting. Well, technical analyst Frank Capillari of Cap Thesis both recently, and then Katie Stockton of Fair Lead Strategies recently pointed out to Barron's that Tesla stock has been hovering near its 50-day moving average at about 172. So if you haven't been paying attention to that yourself, Tesla has been stuck. It's been stuck for weeks now, trading above and below about 172. Baird analyst Ben Kallo noted that about 45% of Tesla's shareholders are institutional, about 42% are retail, and the rest of the company are insiders. They expect the proposal to pass, despite noise from select shareholders and advisors, Kallo wrote in a note to their clients. So we now have multiple of these analysts coming in saying they think it'll pass. We have another group coming in saying that it won't pass. And the stock market is making moves based on their analysis, probably, and also based on fear, anticipation, greed, all the regular reasons. Now, while I continue to believe that there will be a stock reaction to the decision this Thursday, and I do believe it'll pass, but I don't have any special knowledge. Your guess is as good as mine. I don't believe there is even a 2% likelihood that Elon changes anything about his effort for Tesla one way or the other based on this upcoming vote. It's not going to be about this vote. I'd certainly rather the vote for compensation and the move to Texas come out favorably, but however the vote comes out, there will be a lot of work ahead. If the vote is positive, the Delaware court will still need to make decisions, and it's very likely that the entire matter will be kicked up to the Delaware Supreme Court, whichever way the vote turns out. Then, if the decision is negative, there might be further efforts to the U.S. Supreme Court, kicking the entire thing down the road many, many months. So the overhang will still be there. This doesn't really change anything, no matter how the vote comes out. Meanwhile, there will be other plan Bs in the work, whichever way the vote comes out as well. Because if we do get the move to Texas, that'll mean one thing. If we don't get the move to Texas, then that'll mean another thing. And then even if we do get the vote to Texas, the Delaware court might make some other decisions like, no, you can't. And then we've got a new lawsuit, which I mentioned the other day. If you're following the channel, we have another lawsuit where somebody's coming in and saying you need a 2/3 vote in order to get that move done. So that lawsuit will have to play itself out. Anyway, so that if the vote is negative, Plan B kicks in as well. New votes, new appeals. There's a long way from over. What the real issue for Tesla is, getting those robots on the roads and into factories. Selling more cars, selling more trucks, selling more energy storage will be a big help for the stock. But only the robocabs and Optimus can get us to that 5 or 10 times banger that most of us are expecting. By the way, this is Randy Kirk. If you haven't hit the like button yet, this is a really good time to do it. Hopefully what we do here on this channel gives you some information, gives you some ideas, gives you some ways to think about things. I try to cull through the news and find all the news that's important for you to see. And then I try my best to analyze everything, the stock market, how it's moving, what Tesla's doing, the foundationals, the fundamentals, etc. Hopefully bringing all that together and throwing my, theories on top of it is at least entertaining from time to time. If so, hit like and subscribe and notify. Scott Walter and I are going to do an interview just in a few minutes, so that is maybe going to bump Brian White until tomorrow. We'll see which way that goes, but one or the other will be on around the noon hour today, and then should be Nicholas Gibbs with us this evening, so that's why you want to hit notify, and then join Patreon. All right, from Business Insider, Tesla appears to have expanded its hiring to cover a variety of roles, with 60 positions in the US and Canada advertised on the company's website. Now, 60 positions for Tesla is not a lot, but Business Insider thought this was worth talking about, and I thought it was worth at least reporting. So where they had gone down to virtually zero after the cutback, after the big layoffs a few months ago, now they're beginning to put some positions back on the table. LinkedIn says these jobs appear to have been posted within the last 2 weeks. It suggests the electric vehicle manufacturers beginning to ramp up hiring again after a brutal run of rolling layoffs throughout April and May. Electric was first to report on the new job listings. The roles that are advertised included positions in Tesla Energy, both solar and storage teams. Some of those include providing corrective maintenance services for Tesla's energy products and then also its charging stations. All right, well, views about future business conditions are the worst levels seen in 50 years, according to the NFIB report that came out this morning. Let me just repeat that headline. If you're wondering how things are doing in the small business sector, views about business conditions are the worst levels seen in 50 years. Reviews about their future business conditions were seen in 50 years. So if the market is down this morning, maybe this has something to do with it. 22% of owners reported that inflation continues to be their single most important problem in operating their businesses. That is unchanged from April, but 22% still say inflation is number one. Owners' plans to hire rose 3 points in May to a seasonally adjusted net 15% more for the highest reading this year. So hiring continues to be an issue, but listen to the second part. Reports of labor quality as the single most important problem for business rose 1% to 20%. So number one on business owners' minds right now is inflation. Number two is they can't find good people. Labor cost, reported as the single most important problem for business owners, decreased 1 point to 10%, only 3 points below the highest reading of 13% reached in December of 2021. So they can't find anybody. They're having to raise the amount that they're paying, but this is not as nearly a great a consideration as the overall inflation. Well, what does that mean? It means their incoming price increases. So the cost of their raw materials, the cost of their finished products that they're going to put on the retail shelf, restaurants dealing with the cost of food, et cetera, et cetera. This is what is bothering owners the most. Seasonally adjusted, it said, a net 28% planned price hikes in May. This is up 2% from April. 28% planned price hikes in May. The frequency of reports of positive profit trends was a net negative 30%. No wonder these guys are upset. Seasonally adjusted, 3 points worse than April and a very poor reading. Among owners reporting lower profits, 32% blamed weaker sales, 15% blamed the rise of the cost of materials, 14% cited labor costs, and 11% cited lower selling prices. For owners reporting higher profits, 41% credited sales volumes, 23% cited seasonal change, and 10% cited higher selling prices. So you've got people that are reporting that their profits are going down, and it's based on cost of raw materials. You'll notice what they didn't cite anymore was that they can't find enough people. So what's happening is we got the flattening out in terms of the labor problem being an issue, but we do not see a flattening out of the cost problem. 3% of owners reported that their borrowing needs were not satisfied. So once again, This is not an issue, surprisingly. 2%, it went up. It's been 2%. Now they're saying 3%. 29% reported all their credit needs were met, and 58% said they're not interested in a loan. 58%. This continues to go along with my theory that we have an older bunch of folks now running these small businesses, and they've got their problems are solved in terms of finances, but they're sitting here going, hey, we're not making as much money as we should. And that 6% reported that their last loan was harder to get than in previous attempts. 6% of owners reported that financing was their top business problem in May. That's not very many, 6%, up 2 points from April. The last time financing as a top business problem was this high was in June of 2010, 14 years ago. Overall, the net impact is that real incomes fell about 2.5% over the period. However, the impact was not spread evenly. Huge increases in income and wealth were enjoyed by asset holders, people in stocks, real estate, etc., but not shared with most of the population who watched groceries, rent, houses, prices, and auto insurance surge. So these small business owners are in the same boat as everybody else. The ones who have over the years used their profits from business or used their business opportunities to buy assets, they're doing well. The ones maybe that are new in business or who don't have a large business or didn't take advantage and make smart investments, they're not doing as well. The small business sector is credited with the production of over 40% of GDP and employment. So its condition is central to the performance of the economy. Optimism there has been in the dumps since early 2020. Views about future business conditions are the worst level seen in 50 years. Investment remains anemic, lowering prospects for productivity improvements. Unsustainable debt levels, including the national debt, risk destabilization events in financial markets, and the election promise to bring major changes in the tax and regulatory environment. These are things that they're looking at. Regardless of who wins, they're worried about what's going to happen in their tax and regulatory environment. All this presents a very uncertain outlook for small business owners, and uncertainty is the enemy of progress. So there you have it. Let's take a look at where the markets are now. We have got Tesla down, of course. Not of course, but of course, because again, of what's coming up on Thursday, Tesla's down $4.33 in a market that shows the Dow down 263, NASDAQ down 3.69, S&P down 17.61. We've got the Magnificent Seven, somewhat mixed, but just slightly right around break even. For instance, NVIDIA is up 75 cents. Now that would be down 75 cents. Now that would be $7.50 last Friday because it's got a 10-for-1 split. Sitting at 121 right now. We have got Apple up strongly this morning, $7.77, reversing yesterday's negative response to the meeting that's taking place right now and all the new stuff that they talked about. We've got the Cathie Woods all down, just down pretty much just a buck here or 50 cents, whatever, but down, 100% down. The percentages would be the Dow is down 0.7, NASDAQ down 0.03, S&P down 0.33, Tesla down 2.29% this morning. All right, let's go ahead and take a look at where we are on the bonds. The 10-year is down 2 basis points this morning. Good news there at 4.449. We have got the 2-year down as well, 2.4 basis points. There's still about a 41 basis point difference between those two. And the 2-month is only down 0.9 basis point. That has made the inversion a little bigger, but still not back up to the 100, which I consider to be kind of a breaking point on that one. All right, let's take a look at oil. We have got oil heading down this morning, 0.23. We've got quite a bit of reporting this morning on the oil business, suggesting that OPEC is going to slowly but surely allow some more production over the next 24 months, but sticking with their roughly 2 million barrels per day cutback that has been going on all the way to the end of 25. But allowing 100,000 here and 200,000 there based on certain countries needing it, that's kind of what we've been saying for a while now. But the oil market has picked up since those initial reports, and we're sitting right now at Texas Intermediate 77.5 and Brent at 81.52, pretty much in the middle of the range they've been trading in. But natural gas continues to just go nuts, up 4%, 4.16% this morning, over $3 now. Gold, a little changed, 550 up this morning, sitting at 23.32. Silver down actually 2% this morning, and copper up down 1.43 this morning at 447, kind of in, again, the middle of its range. We have got the dollar. The euro continues to drop with all the craziness going over there right now. People rioting in Paris over the fact that the right has made some gains. Does the right riot when the left makes gains? Have you ever seen that? Let me know in the comments before. Show me a news article where the right goes in and starts burning things down and running through the streets, going crazy if the left makes gains. I don't think so. We've got I think we just, oh no, we forgot what happened to the Bitcoin here. We didn't do Bitcoin. Let's see, here we go. Bitcoin down 2,739. Holy mackerel, 3.94% to 66,879. Yeah, there's not even a headline over that in the thing I'm looking at here. So no idea why that's going down so much. All right. So that is pretty much it. Let's go back and take another quick look at Tesla, see if it's continuing. Yep, no change really. The entire market has popped up a bit from its lows of the day, including Tesla, but things are pretty much now going sideways. All right, so if you did not listen to the Brian White video we did yesterday, I'll put a card up for that. That was a lot of fun. Again, Scott Walter or Brian coming up later this morning, and Nicholas Gibbs tonight. So do all the things you know to do, but the most important one is if you haven't become a member of Patreon yet, on my behalf, it'd be great if you do it for some of my friends, but if you be interested in helping out with $3 a month, $5 a month, or $10 a month, hey, listen, recently we had that gentleman come in at $50 a month. I could use a couple more like that. Go on down, jump down into the description, hit that link, and run over to Patreon and contribute to the cause. All right, it's been great talking to you. We will see you later.